Ladies and gentlemen, good afternoon. My name is Stuart McAlpine from the London office of Clyde & Co. We're one of the biggest marine law firms in the world, and it's a pleasure to be in Shanghai today. It's always a great pleasure to be in Shanghai. So we're going to talk to a group of bankers, shipping bankers with a lot of experience in the industry and with, I think, a lot of insight into the current state of shipping finance today in 2018. It's a complex situation, I think everybody would agree. I think that I first started working in shipping finance about 30 years ago, and compared to today, it seemed very simple. Then it was really about the banks. Today, it's about a lot more than commercial banks. We've heard from a very interesting panel of senior people talking about Chinese leasing, which is, it was, I think, a very fascinating presentation and series of comments from those gentlemen, and I thank them for that. And of course, we're going to be followed by the alternative finance panel. So it's a complex situation. And what I'd like to do now is just quickly introduce everybody, going down from Darryl Tan here on my immediate left, Head of Transportation and Logistics for Asia Pacific at ABN AMRO Bank. Then James Tong to his left, MD, Head Asia Pacific and Japan, Global Shipping and Logistics, Citibank. It's quite a mouthful that, but I got through it. Andreas, Ostern, Head of Shipping, Offshore and Logistics for Asia at DNB, the Norwegian bank. Then Rosemary Go, MD, Head of Maritime Industries, Asia Pacific, Nord LB. And then finally, last but not least, Mr. Paul Taylor, Global Head of Shipping and Offshore Finance at Societe Generale. So we have a good cross-section of European and, of course, Citi US focused institutions. So what I would like to do, I would like to first of all ask, I'm going to start with Paul at the other end of the line, and ask Paul to comment on the European banking landscape as he sees it at present, and the appetite for growth among the European banks, both globally and here in Asia. The landscape is changing. Some banks are in, some banks look to be going out. So it's confusing. What does it mean for the wider market, and what does it mean for your bank? So, Paul?
Okay, thank you, Stuart. Good afternoon, everybody. Quite a few questions in one there, Stuart, but I'll try to answer them. But we have to remember that it's not so long ago that the majority of the shipping finance market was actually with the European banks, and my word, how that's changed in the last few years, and there's been this massive shift to the east. So yes, the landscape has changed hugely. We've seen several banks actually leave the market for various different reasons, and we're not just saying some banks. Some of the actual largest banks in the market have exited. They may come back, who knows, but I'm not so sure. Others have retrenched back to Europe. Others are concentrating on their portfolio management rather than new business. And then we've got a small matter of regulation, Basel IV and fair value. So we're seeing banks who will have to put more capital aside to do less business. So I think that the European banks are, the market, there's a huge amount of knowledge, but I think it's the shift to the east is going to continue. So, and that's going to lead to opportunity for those banks who maybe haven't sought to be so large in the past. I think we're one of them, but we're not certainly the only one. Banks who can grow from a lean portfolio, who have got clean portfolios, can compete more and take up some of the slack. But there's still competition out there. And if you're focusing on the top end of the market, it's a crowded space, really crowded. So there's no less competition just because the European bank landscape has changed.
And if I could just interject there, I think the fact is that the commercial banks typically today are focused on the top end of the market. It's that top 20% that fundamentally banks like SG and others here represented want to lend to. And it's that 20% that have the variety of choice that was talked about on the panel before lunch. So I'd like to come, if I may, to James, to you from a just rather than having a series of European bank perspectives. Maybe you could give your view and the Citi view on this topic.
Sure. Good afternoon, everyone. I'm really glad that actually the leasing panel before they did not really single out American banks, that the failure was more the European one. Just a joke. I think that for the shipping industry itself, you will continue to look at it as asset financing. There will always be asset to finance. But if we continue to look behind the asset itself, what are these vessels are for, looking at the trade behind it, then it's another way to look at it. I think over the last 20 or 30 years, that shipping finance have been dominated by European banks because it was booming. The landscape was very different, particularly after China accession to the WTO. The trade is growing in double digit. We do need a lot of ships for the global trade, whether it's dry bulk tankers. I think that was just a booming years. But at the same time, the landscape has changed. The unimaginable has happened. Hanjin also collapsed. Cheap money is no longer available. There are lots of changes. So I think it's good to have new players in the market, but I think it would be wrong to assume the new players to be the substitute or replacement because the landscape has completely changed. I think before the 80s, most of the banks were financing shipping was in fact, American bank and Japanese bank too. So a shift is very constant. A bank will have different strategy, different portfolio management up to a point. And I think capital market, I've always emphasized, is where the US dollar is the deepest. The rating agency was not able to rate shipping industry in the past. We always think that it's a non-investment grade industry, so deter a lot of ship owners to get rating, also to basically hand the dirty laundry out to the market, because there's still a lot of commercial banks providing the facilities. I just think that going forward, there will always be banks coming back here to look at asset financing, but for those more forward-looking shipping company would source different type of financing, including capital markets, because there'll be more knowledge now in the rating agencies, in the investors from the capital markets. There's no interruption. Pretty much like the project finance in the last 10 years used to be handled by banks. 10 or 20 years, 30 years, this should be okay. But regulation, capital charges will move that out of the banking business. Someone will pick that up from the capital markets. This is
Andreas,
what I see.
go ahead. Thank you, James.
Thank you. Thank you. I think there's two. I just want to shoot in with two comments. And Paul, you mentioned the two-tier market, and you mentioned the capital markets. And I think for the shipping banks, we've been around for a long time. It's a tremendous amount of understanding of the shipping markets within our institutions. And lending is just one of the services that we provide. We do raise a lot of capital, and we are a financial partner to many of our long-term clients. And I think leasing that we discussed earlier is a fantastic new source of capital into this industry, and we work very much with many of those leasing houses to solve our clients' needs. I think going in capital markets, there are also a difference how they are evolved around the world. And I think the deepest capital markets for sure are in the United States, in the dollar-dominated market, as you mentioned, but also in Scandinavia has a very high, or have historically shown a good risk appetite to finance a lot of shipping and offshore projects.
Sure.
And we have done, in our institution, 20 high-yield bonds only in the first quarter of this year, and more than 70 maritime high-yield bonds since 2014. So raising use $11 billion of capital to this industry. So that is also an alternative source of capital that you have, and these capital markets might not be open, all of them at the same time. So mentioned by some of the ship owners earlier today, having a different source of capital and always being ready to tap the different markets, I think it's a very good strategy.
Thanks, Andreas. And actually, I'd just like to sort of develop that a little bit, because what struck me from the panel before lunch was that the owners were saying the banks will remain important in this industry. There didn't seem to be any disagreement on that. James, I think, is going to disagree with me, so we'll come to that in a second. And the gentleman from the Chinese leasing houses was saying, we see ourselves as a bridge, and we want to develop that bridge into a wider platform, which suggests to me that they see what they have to offer as being something complementary to what the banks have to offer. James, I'm going to come to Darryl and Rosemary in a minute, but James, you were disagreeing with me, so why don't you just kick off briefly on that one?
If you look at it as an asset financing, yes, bank will always be there as an asset financing, pretty much like any mortgage loan. But over since the financial crisis, in fact, the one who step up are the export credit agencies. They have been the one that providing quite a stable sources of income, stable sources of finance, and then the leasing company also comes along. I think this would be the major financial sources, because the objectives are very different. ECA's objectives are more for export. So long there will be export for shipping nations, then they will be there to support it, whether there will be commercial loans or not. So that is my opinion.
Right.
And then just like Andreas mentioned, that the various capital markets too, I think the offshore Norwegian bond market was really active for shipping companies because they were not rated, right? You can get a lot of unrated bond like these. But as I mentioned, the rating agents have caught up their knowledge now. So I think they build up quite a lot of knowledge in the industry. So I think they will be replacing some of the banks.
Right.
I think the knowledge is catching up for sure for the other banks.
Okay, that's great. That's very helpful. Rosemary, I'd like to come to you and just ask you to, just to comment on this this point that we're discussing about, looking forward, and the point made about the Chinese leasing houses seeing themselves as forming a bridge or a platform in the future cooperation with the commercial banks. How do you see it? What's your perspective from Singapore?
Well, good afternoon, everyone. I would say that they do bridge a gap, and that is really something we have benefited. I think I'm a little bit different from where I'm coming from. I'm on a different situation as Paul. Paul is probably in a better situation because he's probably entering the market, shipping market, with less of a legacy to deal with. Obviously, from our European background, from a German, as a German bank, we have a little bit of a legacy portfolio, but the bank remains committed. So we see Chinese leasing houses really as true partners for us. We have done quite a number of transactions. Over the last few years, we've been getting to know each other a little bit better, and I think that going forward, this will be the structure that will be here to stay for a while.
So like a sort of
a partnership, yes, a
partnership structure. Yes. Darryl, I'd like to come to you, and I'd like actually to sort of take the discussion a little bit into this jurisdiction and into China. ABN, I think it's fair to say, has been very, very active in the market in the last year or two, done a lot of deals. And how do you see, how do you see what ABN can offer here in the Chinese market? That's really what I'd like you to focus on.
Right. Thanks, Stuart, and good afternoon, everyone. Indeed, ABN has been quite active in the market in the last couple of years. There has been a retreat of some of the traditional banks in ship financing, and we took the opportunity to step up, also because we have a healthy portfolio, and that offers a lot of opportunities for us. We see China as an important region for us in the bank. We want to grow here in Asia, and of course, here in China, or compared to, say, in Europe and in the US, owners tend to get better terms. It's just much more competitive here in Asia with, the European banks are here, the American banks are here, and then you have competition from Asian banks as well. And like what has been said on the panel, lenders like to go for the top tier names or the top 20%. So if you want to go for that slice of the market, you're just basically competing with everyone in the same space. Well, I think it's not easy for us, to be brutally honest. Where we see we can make a difference is that we have a global franchise. We're very well connected internationally with different ship owners. That can allow us to provide strategic ideas to owners here in the region. We have a large platform that makes use of the global capital markets, which can give access to clients here in the region as well. On top of that, well, James mentioned the use of ECAs. We are a very strong bank that has utilized the ECAs for financing for clients a lot in the last few years, and we can use that with clients here in the region as well.
Thanks, Darryl. Paul, do you want to jump in there?
Yeah, just want to say that, I mean, it's not really an option as to whether we're active in China, and it's the epicenter of the shipping market, the shipping finance market as well now. But it's a question of being relevant, because as a European bank, if you just come to China and try to compete with the lowest priced dollars, eventually your bank will stop you doing that business. So of course you have to be competitive. But you've got to go in there and add something. You've got to add value. And so you've got to focus on, or we have to focus on our core strengths and actually provide smart capital. Because if we don't do that, our role's going to be a short-term one. So it's very, very important to add value and have smart capital.
By offering flexibility, different product choices,
well, you focus on your
access to
strengths.
capital markets.
Focus on your strengths first of all.
Right.
But it's, of course, the debt is mandatory. We have to provide that. But also providing financial, commercial advisory business. Of course, working with ECAs, and then you've got the small matter of One Belt, One Road,
yes,
and all the opportunities that come from that.
Yes, great. Andreas, can you give us some comments on that, please?
I think Paul is hit it very, very right on, that the banks need to offer something different than just lending. I think all banks have a different platform that make them unique based on their strength. Some banks have a very strong trade finance platform and know the clients and the industry from that perspective. Others are extremely good in cash management and has a global reach out of that. You have the Scandinavian banks and the capital markets there and the American banks. So it's all a different niche. I think most of the banks can offer a lot of different advice on many of the same services, and that's good for competition, but there are also some places or some areas that banks excel at.
Yes.
So I think that's what we're focusing on, and lending, of course, will always be important for us, but we need to find the structures that also make sense from the bank.
Yeah, my sense is that, and for as long as I've been in shipping finance, the bankers that I've spoken to have often said that they want to have a holistic approach to a client relationship and to expand that relationship beyond lending. But it's easier said than done, isn't it? I mean, I wouldn't mind you commenting on that. My sense is that it's easy to say, but it's more difficult to do. Anybody want to?
Well, I'm sorry, I don't want to hog the microphone, but absolutely. Your base product has to be lending. But it's important for the bank's return on capital, particularly as the capital charge becomes more expensive under Basel IV, to make a return that justifies the outlay. So you can do that in many ways. You can provide high-priced debt, but that's probably not going to get you very far in this part of the world. Or you can provide other services and solutions. So yes, I would say, as long as you're making your capital return, it can be justified, but providing non-debt facilities and solutions is going to be pretty important in getting your capital allocation within the bank to actually provide the service you require.
Yes, and the regulatory environment, I think in particular for EU-regulated and US-regulated banks, is particularly difficult. And I was talking to somebody, before the lunch break about the state of the market. Would it be likely or not so likely that we'll see a resurgence of bank lending in the next 5 to 10 years? Is it likely that many of the banks who have exited could come back in at some point? Because, as we know, that happens. And the gentleman that I was speaking to was, he referred to the regulatory capital issue and the fact that it's the amount of capital that needs to be set aside in the context of a shipping transaction is significant. And his view was that the market has changed for as long as we can sort of foreseeably, look into the future. So just to come to this regulatory capital issue, and maybe Darryl, you could kick us off on this. I mean, how do you see the situation from that perspective?
I think definitely what you said it's definitely it's fully right. That it is becoming much more difficult for the traditional ship lenders from a regulatory perspective. I think what will evolve or what will happen more is that ship financiers would try to use ECAs more, because that would give relief from a capital perspective. Working with strong corporates or Chinese leasing companies that have good ratings, that helps as well. And also maybe the use of credit insurance that has not been discussed very much, but that's still a relatively untapped market. I don't know if at some point credit insurers would step up to the plate to help with the situation, but that's definitely something that needs to be explored.
James.
I think we have to look at the different sides of the coins too. So long there's a bank that will be lending. There's nothing sexy about banking. It's about deposit and loan. So loans will always be there if there's deposit. Maybe we should look at it, instead of offering a long tenor, if the shipping project itself is so good, there should be more equity in place, low LTV, shorter tenor. That might be another way to look at shipping too. So we always seems to like to stretch the loan longer, highest LTV, and pay little. So it's just a shifting the risk back to the owners, because as I always mentioned on the conference, might not be a bad thing, because the lower the LTV that you can get financing, the higher pricing, you actually create a barrier of entrance. You don't allow any speculation and or investors in the asset and hoping to gain out of the market value. I think probably you have to look at it from the operator perspective or looking at a speculation perspective. So that could be the case too. That could go back to more safety, safer way to lend out of the bank. At the end of the day, the depositors will need to be protected. In that sense, they should take less risky project.
Yes, yes.
I like that thought or that comment, but maybe we need the leasing companies to coordinate with us to make sure that that happens.
Yes, and in fact, Cecile Lee from Wah Kwang said something very interesting. She said that generally at this stage in the market, she finds the leasing companies more innovative, that the banks are more constrained by regulation, and that the owner is therefore getting more flexibility. And I thought those comments were very interesting. The other interesting aspect of this, I think, is, and it has been mentioned, is how will the leasing companies weather a downturn? That will happen. Maybe in some sectors it has already happened. And if anybody wants to jump in and comment on that, that's fine. But I think everybody's asking that question. What will the decisions be once a downturn bites and people maybe have to think about how they're going to allocate their capital going forward? I'd like to come to just spend a couple of minutes focusing on the sectors, and I don't want each of you to go through your thoughts on each of the sectors necessarily, but it would be good to hear from you in terms of which ones that you feel particularly excited about today as we stand here in April 2018, and which you're not so excited about. I mean, Rosemary, would you like to take that one?
Well, for the bank, for NordLB, we are not really sector specific. We are not biased. However, I think to be realistic, to bring a offshore oil and gas transaction today, I think that would entail a long discussion with credit. For the bank, I think from the experience that we have, we are pretty supportive of specialized assets, and we've also got substantial experience in cruise and ferry business. So I would say that would be the sector that we would be looking at more closely. And last year we were in a syndication together with KfW for 4 units of river cruise. This is public knowledge, it's in our annual report. With a Asian ship owner, is for 4 units of river cruise, and they are operating in the German rivers, so European rivers. So yeah, that will be the sectors that we are looking at.
Thanks, Rosemary. Paul, maybe you could go next if you have a.
Yes, of course. I think the long-term fundamentals in LNG and offshore production remain good. So we probably do a disproportionate amount of that type of business. But actually, you know, we're pretty agnostic when it comes to sectors. We look at it on a corporate basis. You know, if we could get closer to our clients, understand their strategy, we'll support them through a good and a less good environment. You know, shipping loans tend to be long-term facilities. You know, they are 7 to 12 years, and you don't go through more than one cycle. So I wouldn't say banks are always the smartest creatures, because banks tend to support shipping transactions when the market's quite strong, and don't when the market's weak. And we should really have a much more anti-cyclical approach to the market, and arguably be having a preference really for the markets which are weaker today. I don't think banks as a whole are particularly good at that. So we have a corporate approach.
Andreas, thanks, Paul.
I think that's very right, and we have the same approach. It's more the client focus for us. We follow our clients in their investments and in their segments, and we work with them through those cycles. But to your point, Paul, I think when we look at the corporate perspective versus a project perspective, we always look at the balance sheet of your client. And in good times, those balance sheet looks better and have to set aside less capital in the bad times. So when the balance sheets are weaker, then the bank debt is then more expensive. Although from a cyclical point of view, it might be a better time to invest. But there are interesting trends in many segments, and cruise is being mentioned as a segment that is quite interesting. There are only 2 to 3 yards, so it's more similar to aviation in that respect, and most of the new buildings are funded with ECA financing. But that market is evolving over time, and it's a quite big new building activity as well, but still also increasing demand. So that's an interesting segment, as well as other industrial segments.
Thank you, Andreas. Darryl?
Yeah, I think most banks are not dissimilar. We are sector agnostic as well. We work with the clients, and we see shipping as a cyclical business. So actually, if there's too much positive in the segment, that can be a worrying trend, because you tend to see ship owners going to the shipyards again, making new orders, and what can be positive might not be lasting for a very long period of time. And so for us, we always look at the client first. It's not always big corporates. We can work with sort of the medium-sized clients as well. But we like owners which are prudent. We've seen the cycles. Liquidity, it's always a big discussion that they should have, or they do foresee sufficient liquidity to last through the difficult times in shipping.
Thank you, Andreas. James, any particular comments?
I like the container ship sector because it's been merged, consolidated, only a few alliances there. I believe that there will be more consolidation going forward. So it should become more like a utility industry. It should be stabilized, and then margins should be pretty predictable, rather than having a boom or bust. But that will take another few years, and then it will be the next one, regulation on the NOx and COx scrubbers. Lots of ships will be scrapped. There will be a new breed of assets. You need to be replaced. So I think 5 years' time, almost all sectors should be booming, because a lot of ships will be taken out of the system. I think this is the wishful thinking of a lot of owners. But I do think that the container ship should be more stabilized from the operator perspective. So if it is lending out to the operators, this should be okay. But if you lend it out to the owners and charter to the container ships company, then you need to ring fence yourself based on the tenors and your exposures. That's how I look at it.
Okay. We've got about 10 minutes left, and there are a couple of topics that I want to cover in the last 10 minutes. I want to ask the bankers to look into the crystal ball a bit and try and project forward over the next 5 years or so. I think going beyond that is not very sensible. But before doing that, there's a topic that I wanted to raise, which is really the subject of sustainability and corporate responsibility in shipping. There's an awful lot, quite rightly, written about this today, and it's a topic of growing importance, I think. And of course, for banks and other players in ship financing, it is something that they're paying more and more attention to. So I would just like a few comments from those of you who might wish to comment on this. Andreas, do you want to kick off on that?
Well, I think corporate responsibility is becoming more important for all banks, particularly in Europe. And I think it's important that we also have a good dialogue with all the parties within the shipping markets on how we can tackle the issues that are for our industry. And what's been mentioned with NOx and SOx and better fuel and the regulations that are coming, that is important. So having a good dialogue with owners, I think that is crucial. Also looking what can we do as lenders, what can the class do, what can the ship owners do. And we see that most ship owners take this topic seriously. There might be a different level of transparency where the listed entities have become much more advanced, I would say, than some of the private. But I think the private companies are also thinking about this and working on it on their board level, but they haven't maybe yet formalized their own policies. But I think that is something that we need to tackle in a transparent and good way, as other industries have done it as well.
Thank you. Anybody else?
Yeah, I was going to say at SG, it's a massive issue. I think all banks have a responsibility to make shipping a greener business, and we're no different. So SG's joined a consortium called CLNG, and to push LNG as a fuel. So I heard the presentation this morning, the panel. We think LNG will be a fuel of the future, certainly. And we're the only bank on that consortium, and we take pride in that, but we don't want to be the only bank on the consortium. We want other banks to join us. So I think it's really key. And I think, yes, there's a responsibility issue, but there's a business opportunity issue as well. So
thank you, Paul. James?
I think that the ship owners, shipbuilding industry should take active approach to be a active participant in that rather than leave it to the regulators. Most of them might not be the industry expert to impose regulations that might not work. So I would suggest that the player itself should be the one who's driving the policies and step up with the protection. Banks, I think we're just facilitating that. And at the end of the day, we are not the operators, right? We just lend a bit less, put it this way. Yes, someone might out of business, but I think it would affect the shipping business more if their players are not active in driving these environmental issues.
Doesn't it have to be done jointly, though? I mean,
yeah, of course it could be jointly. But I just think that not a lot of regulators do have shipping expertise.
It's true.
Right?
I think you're touching to a very important issue, and it's not only to do what is the right thing to do when you think about it, but also how do you control your reputation and make sure that you control it and nobody else. And be aware that we all live in a fully transparent world these days, and everything is tracked and monitored on GPS and on the social medias. So I think it's important to be aware of that and be prepared and have a good policy on corporate responsibility.
Thanks, Andreas. That's great. So I think each of you is going to probably have about 1 minute each to talk about the future and where you see your institution in however long a period. It could be 5 months or 5 years, up to you. Rosemary, I'm going to ask you to go first.
Well, NORDLB remains committed and invested in shipping. We have a rather ambitious target this year. For new business, we have been allocated 2 billion for 2018, of which 800 million euro is reserved for Asia. In the medium term, we see the portfolio to be around 10 billion euro. Of course, we are also, one of our key focus this year would be to reduce our non-performing loans to about euro 5 billion by 2019. So just as a closing, we remain committed to shipping. We would definitely find our partners, whether it will be through bilateral relationships or working together with the Chinese leasing houses.
Thank you, Rosemary. Andreas, why don't you go next?
We will strive to be a global leading financial partners for our customers within selected industries, within the ocean industries.
Thank you very much. Darryl, I'm going to come to you. Yes, it sounds cliche, but indeed, ABN AMRO would remain dedicated to the industry. We are committed to our clients, and we want to be there for the long term. We want to become more relevant for our client and for the industry as well. Well, personally, for me, we would definitely want to grow our exposure here in Asia and to extend our client base further.
Thank you very much. James?
For Citi, we have been committed to industry. We might not be the one who directly lend to our clients, but we don't think that is necessary because we do think that we're the best house to source different capitals, different forms of capitals for our clients' need. So we'll continue to be the innovative bank to bring new products and new investors into this industry to continue to make this industry vibrant.
Thank you very much. And Paul?
Thanks, Jim. SG has scope to grow significantly in this sector, so I expect that to continue. It started over the last 18 months, but that growth has to be smart growth because we don't just want to lend for lending's sake, because big it's not necessarily beautiful. It can be, but it needs to be done in a smart way. And so we will continue to focus on our strengths of being a structured and project finance bank and an advisory and capital markets player, and we'll achieve growth in that fashion.
Thank you very much. So we do have a couple of minutes left, and I would at this stage like to invite anybody to ask questions. I think one or two of the guys here may have to leave quite soon to catch a flight, so they might not necessarily be available during the next break. So if anybody has anything to ask them, just doing a quick scan. Oh, sorry, there is one. Oh, sure.
Thanks very much. Thanks very much for the panel. One quick question. Considering the coming Basel III or IV even, and the Chinese deleverage, whatever you name it, for the new building orders that placed by European owners or American owners, especially for dry bulk and the crude tankers, what do you see let's say for this panel and previous panel, what do you see the percentage in the, let's say, who will gain more shares in the next 2-3 years? This panel or previous panel for the dry bulk and crude tankers? Thank you.
I think it might not be necessarily that important who's providing the financing, but who's sourcing it. There is a lot of attractive sources of capital for new buildings now. And you mentioned some segments. Would they have, for instance, long-term contracts attached? You know, it's huge spectral opportunities of capital you then can source to finance such vessels, pre and post delivery, I would assume. So it all depends, but I think it will be a mix.
Yes, and I think it's not a competition. I think the banks on this panel are not looking to try and gain market share by competing or undercutting banks. And like Paul said, big is not always beautiful. I think, like what Andreas has correctly pointed out, it's most likely going to be a mix. We might also be working with people on the previous panel, together with ship owners, to provide different source of capital to the market.
I think that's the point. It's not totally a competition. It can be, but it's working together. So I think banks, international banks, now are working with the Chinese leasing companies. It works very well, and it can work. It can work both ways with the banks bringing transactions, bringing clients to the Chinese leasing companies. So. Yes, the Chinese leasing companies are going to remain massive, and there may be some reduction in the European banking landscape, just to bring it back to the first question, over the next few years, but they'll both be involved.
Great. Sorry, my microphone seems to have stopped. So I think that's it. I would just like to thank Rosemary and the four gentlemen here very much for participating. Hopefully you enjoyed the discussion, and we'll now leave the stage. So thank you very much for listening to us. Appreciate it.
Thank you.